right. Start here in just a second. Almost there. Okay. What's going on, everybody? Good morning. We got ourselves a spooky sell-off on Halloween. Do I got reverb on this mic? I don't think I have that on right now. Could be a little bit loud. It could potentially be clipping a little bit. But no reverb, I don't think. All right, how's everyone doing today? We got the market selling off a little bit, but nothing really too wild when you zoom out, right? It's coming into and around that 50-day moving average. Let's take a look here more specifically at some intraday levels because people are probably losing their minds. I want to first focus in on the weekly expected move. The weekly expected move. Do I have reverb on? Is my mic? Okay, no, it sounds fine. Like, okay, I'm seeing it on different chats now. I think I'm getting trolled. Oh, it's Moonraker. Yeah, I'm definitely getting trolled for sure. Okay. Let's first take a look. Yeah, the market jumped down, right? We started lower. We had some earnings reports, right? We had the earnings report, Microsoft, Meta, right? Go to Microsoft, right? Outside of its expected move, we basically opened at its expected move. We're starting to break from that earnings expected move right here. So that's going to put weight on the market. We can look at the S&P 100. We'll look at the largest market cap names like these. Oops. Okay. You have Apple that's down 1.24%. You have Nvidia, which is down 4%, which when you zoom out, once again, this holds a huge implied volatility and it puts weight on the markets. Okay, so that's down. Microsoft is the big one too. So you got Microsoft and Nvidia really weighing down the market. Now, after the bell, we have the A's reporting, right? We have Amazon, and Amazon currently is also down quite a bit, right? That's down about 3% on the day. But let me just show you this. The expected move for Amazon going into earnings is $12. All right, so we're down $6 right now. We have an expected move of $12. Meta is also down 3%. All right, well, what's it been doing? It's been kind of going sideways. Heavens no. Heavens no. Now, as far as some zero-date levels go, we are through the daily expected move, probably into 2 standard deviation, maybe even more than that as it stands right now. It'll be 3 standard deviation. As far as the VIX daily expected move goes, that's the implied move based off of the VIX, which is the volatility index of the S&P 500. We're currently outside of that. Now, and then also on the Qs too. We're still above our weekly expected move. We're below the 5-day moving average in most cases of most products. So this is where you proceed with caution anyway. If we take a look at gamma levels, what happens when we're in negative gamma? Well, we see selling into selling, we see buying into buying, and you could see big rips on either direction. That's what happens in negative gamma. When we're in negative gamma, volatility can typically increase. So what do we see right here? Let me activate this drawing. As we're in negative gamma, right? The gray boxes are when we reach into negative gamma, and then they end when we get out of negative gamma. You can see that we've seen spikes in volatility. So we're in negative gamma, we're seeing an increase in volatility. Shocking, no surprise. So this goes back to all the other videos that we've been talking about of why I'd be really kind of more bullish above 58.50, because that's been this pit in the markets. And then when we're below it in this area, it's more cautionary. And there you go. We get a big move. Now people are probably going to want to find out how to buy this specific dip. So this is where the kind of vol bands come into place. So I'll pull up the SPY. I'm going to go ahead and apply just the volatility bands. All right, this is an indicator that I just put together for Thinkorswim and TradingView. I put it available on Twitter, and also if you're in the Discord, you can just copy and paste the code from there. I put it in the announcement section. I got to build a separate channel for all this stuff. So let me apply this. Now, you're going to notice some candles are yellow and some candles are not yellow. All right. The yellow candles show when we had closes outside of that volatility band. So what are we seeing right here? Well, it's yellow. Why? Because we're outside of the volatility band. Now, when you think of things in terms of probability, because a lot of people will look at these levels and say, I want to execute at the level. That's not actually what these bands are for. It may look awesome in hindsight, but it's really when they start moving from and out of these levels or near these levels, you can take into other things into account to determine whether or not it's the best time to be buying intraday. So if you look back through this chart, you'll see that, okay, we're yellow right now. The day's not over though. All of these candles, the last time we had a yellow candle was right here. And all these candles then right over here. So what does this tell us? It tells us that basically, actually I'm not going to use this day because it's not done yet. It tells us basically, so 47 different trading days here, of which of these 47 trading days, 3 closed outside of the bands, right? It doesn't mean that we didn't get outside of the bands, right? Didn't mean that we didn't get outside of the bands, but only 3 of those 47 bars closed outside, which means that there's a high probability that we close inside the bands. So that's what it comes to as far as probabilities of trade. So if I go now to the SPY and I'm looking at the SPY from an absolute perspective, okay, this is the band 527.57, and I see, wow, okay, from an absolute perspective, we're just following this trend line basically down, all right? This is just the technical analysis aspect of it. So is there anything from an absolute technical perspective that I'm like, okay, if we start breaking this trend, will that indicate that we might be able to start finding the low of the trading session? And that would be the ideal thought process there. It doesn't mean that that's always it doesn't mean that it has to be the case, but that would be the thought process there. This is the daily trend for the day so far. If we start breaking it, are we going to start doing something like that or potentially head higher? Okay. That would be the thought process. But then you go into market net flow. And what's market net flow been doing? Okay, market net flow this entire day, which is the cumulative net premiums of puts, cumulative net premiums of calls, and you're watching how they diverge from one another. So the red line is above 0, the green line, right, below the 0 line, and what we're seeing is them diverging further. So if you're trying to buy the dip and execute at every level while it looks like this, that's not a good strategy, because chances are that we're in negative gamma territory. We're reaching down at some key levels that might start to find the bottom of the market. That's totally, fine. But you do have the flow of the market going against every dip that you're buying. So what I like to look for is a change in character. The change in character could come from market net flow, amongst other things. So one of the changing characters, once again, could be a potential, trend break or some higher lows, right? Higher lows or so forth. But then another change in character when we have such negative market net flow is potentially of this turning to gray, right? Convergence, which tells us what? It means this price of the SPY is no longer moving with market net flow, and therefore we could potentially see a counter move to what current flow is at. Or another thing that you can potentially watch for is this green line, the cumulative net premiums of calls, to start potentially turning up, and this to start coming in a little bit or flattening out while this comes up. So the divergence between the two starts to narrow while this turns gray. That would be also a potential ideal for wanting to execute into it. Thanks, Obi. Okay. So SPY currently down, what, 1.5% on the day. That's a fairly decent sized day. We don't really see days. We haven't seen 1% days really in the market. It feels like for a minute here. And when I say market, I say S&P 500. Okay. So now after the bell, we have more earnings. Let me go, give me a second here. I got to change the volume on this. It's bugging me. And let me take a sip of coffee too. Oh my gosh. The sweet coffee. The sweetness of coffee. Okay, after the bell, we got Amazon, we got Apple, the big market cap names reporting. So it's going to be important to see what those expected moves are. So if we go into Apple, all right, the current price action is way down here. I'm going to just, for the fun of it, I'm going to pull up its vol bands too, because we do have Apple volatility product. So Apple vol bands. So we still haven't even tagged down to the lower implied move for Apple, but we're near there. That's the lower implied move based off of the volatility product of Apple, which is I think VX APL or something like that. I don't remember off the top of my head. But then we go into the trade tab, and you're looking roughly at an $8.88 expected move for Apple. So roughly $9. And that goes, and this can change as we get closer to the day, closer to the end of day. But that means if we're just say if we close right here, it means that price can move basically, it can shoot right back up to 236. Say if we close there, right where we're at, we can see Apple rocket up higher and tag up to 236. Or if the market doesn't like what it sees, we can extrapolate on this current sell-off that we're seeing below this declining 5-day moving average. Another 9 points, right? Down to here, roughly down to here, 218. Amazon, we'll change this because I think Amazon also has a product for volatility. It does. Amazon is currently trading under its implied move for the day, just based off of the Amazon volatility product. Okay. Now, if I go into the trade tab here and we go over here, we're looking at a roughly $12 expected move. So if price were to close right here, we can see price up here towards 200 by the end of the trading session, or not by the end of this trading session, but by the time that they report earnings, or after they report earnings. Oh, it's difficult for me because this is the range of risk. Now, on the flip side of that, if we close where we're currently at, we can come down here and we can be down here towards like 174, 175. So the point of me saying this is the market itself, the S&P 500, is doing exactly what the market anticipated. We're well within the week. Okay. The day, we're seeing some increased volatility, which creates opportunities for the following day. And if I go here, I'll show you kind of what I mean. I'll show you the Qs one in a second. Let me go to SPY first. These are the expected moves for the week on the prior weeks. And you can see that we've gotten outside of the weekly expected move. This was, we didn't touch it for 4 weeks in a row. Then we did. We came down to the lower. And now we basically traded sideways for the majority of the day. And finally now, the week did expect more volatility. And we're coming down north of this expected move. Or south of this, coming to this expected move. So if the market wants to press lower, it's the market just doing exactly what the market told us to do. So what happens if we even head lower? Well, we'd be coming into a prior area of which was resistance. And once prior resistance is broken, it has the potential to become potential support. So all throughout this area here isn't necessarily on the sell-off that spooky, at least in my opinion. You know, we're just getting a little bit of a hit of volatility. Can it turn into something more? Absolutely. So what happens if it turns into something more? Well, I'll get into that in a second. Let me look at the Qs on the daily time frame just to show you, because it is pulling into the anchored volume weighted average price from this big candle over here. There's a big volume day over here, and you can see that we've held, and now we're kind of pulling back into that level right here. Okay. So what do we do in terms of, you know, how to approach this? I guess I can read my note from last night that I sent out to the Discord because I didn't put out a video. Okay. So what do we do? One, if you are more cautious of a trader, you wait for the conditions of the market to change back. That's typically what I do before I add like crazy amounts more exposure back in. So as you can see, now all of these products, the SPY, the Qs, the IWM, the DIA, the XBI semiconductors, they're all underneath their declining 5-day moving average. They're all declining now. So we would have to be patient, and we would have to wait for price to get back above the 5-day moving average. But more importantly, not just get back above it like it did over here in DIA, but for it to start to flatten out and turn back up for potentially catching the change in trend. But on top of that, you want to look and make sure that we're back in positive gamma territory, because if we're not in positive gamma territory, we can see a lot of shakeouts, fake outs, and really increased volatility. And when you have volatility that increases, it means that you're going to be dealing with larger swings in your portfolio on a daily basis, right? If you use higher beta names to trade and you're doing the same type of position sizing, like a fixed amount or whatever the case may be, you're going to be able to see those move a lot quicker because they're higher beta names relative to the S&P 500. Okay, so let's go over to SPY, and then let's look at market net flow. Where is it? Market net flow. So market net flow right now, what's it showing? It's basically saying that your dip buys can get destroyed in the current context. Let's go to 0-date levels. All right, and there's a lot. The 0-date started off really just kind of around 57.50 as one of the main levels. And you can see that as we started seeing more selling and market net flow hasn't changed, traders started to reach out to 57.25. And now they're reaching out to 5,700. So if we get more sell side in the market, what you want to do is make sure that you're well aware of 5,700 on your screen, which is right here. Okay, so let's clone this out and go like this. Now, does it mean it has to reach there? No. But what it's telling me right now, what the market's saying is basically don't bother buying the dip, but if you want to execute at some of these levels. And if the market net flow changes, cool. And now what's crazy here is as we're selling off and potentially coming into a weekly expected move, which would be a big move for the day. That'd be a really big move for the day. And I wouldn't rule it out. We're also having earnings come, and those are pretty binary. So it's crazy because if the market likes what it sees on both those earnings, I mean, we could be right back up to here tomorrow, right back up to the 5-day moving average. It's true. Okay. So if you are executing, if you are buying the dip, the way to approach a dip buy in this situation is really not wait for market net flow to change. But if you were to do that, your position sizing should be probably very small, and you should focus on your lower levels, like the lower levels in scale, very slowly into it. So you don't not like a buy here, double there. You'll get waxed. What would you do in those situations if you were really buying the dip? You would look at these gamma levels and you say, okay, if I had a little here, maybe I'll add a little bit more here and then here. But you're thinking in terms of, hey, I think we're going to see a rip back up because of XYZ, whatever the case is. And then you're averaging slowly in, but you're not also taking a full size position, doubling that full size position, and doubling that full size position. You get wrecked in those days if you do that. Like you would just get completely obliterated. So if you have like say, hey, this is my full size position is, I don't know, whatever. Let's just say let's make it easy. Let's say my full size position is 3% at like on a trade, not like 3% loss, but like just say 3% of your portfolio that you get into or whatever the case may be, just for ease of purpose. And you're like, I think it has the possibility to come down there, but it might not. So I want to scale in. So I'm going to do just 1% here, which is basically, not going to affect me. And then I'll do over here, and then I'll do over here. And then maybe if that's the case, then I come down into a key level, and I'll look to see what price does at that point. And if it continues to sell off, I'll be losing. I'll just take my loss. That's one way to approach it. Personally, I like to just wait. I like to just sit on my hands and just watch this go by, especially when market net flow looks like this. Now, if market net flow, like I said, if this green line was turning up right here, or if even the green line was above the zero line, the red line was coming to whatever the case may be, or if this was gray, I would be shouting from the rooftops, yeah, this could change. This can change fast. Right? Especially if you have the market down 1.6% and the market net flow is looking pretty bullish, going into some key levels, yeah, I'd be executing into that from an intraday perspective. From a swing trade perspective, on that portfolio, I don't really bother too much. I just manage what I have on. Okie dokie. All right, let's take a look at some of these comments here. Let's see here. T1 supremacy just say, I'm just not going to trade. Yeah, I mean, that's the easiest thing to do. If you don't want to trade, just don't trade. I mean, if you don't want to sit here and fight the tape, like, right, I don't like shorting into these levels. Like, I don't like shorting like after a big gap down and then press lower. Like, I'm not going to short into this. And if I'm going to be buying the dip, I would prefer it to be this dip taking place above a rising 5-day moving average. And or if I'm trading an intraday, I would prefer market net flow to be a lot more bullish, and it is not. So you can just sit, you come to the conclusion, you just sit on your hands. Okay, we'll look at some other products here too in a moment. Let me just take a look here. Dell now. Yeah, we can take a look at some of these names. Netflix. TLT. Yeah, I got a lot of names coming up. And we can take a look at them. Yeah, 10-year yield still rising rapidly. Look at it. I mean, came off a little bit. Now it's right back up. Look at that thing. This thing's wild. You can take a look at bond volatility too. I don't have it on this platform, but you can look at the MOVE index, and the MOVE index is high. All right, bond volatility. And we've been seeing just a monster move in these 10-year yields as we're approaching kind of all this, getting through all the election stuff. And then the dollar, let's not forget about the dollar. The dollar's been on a monster move. So what is the dollar pricing in? Right, we're talking trillions of dollars here, right? Trillions of dollars traded in the dollar. Right, volume, whatever. And what are they pricing in? And if they're wrong, that can be quite interesting too. Qs are now down 2.3% on the trading session. Not even too far off of their inclining to flattening 50-day moving average. Now, if we go way back, take the time machine to like a few videos ago, way back to a few videos ago, when price action was really kind of up in this area, kind of up in here, this is kind of what I wanted to see. This is exactly what I wanted to see. I wanted to see the market break from this 850, the 5850 level, right? Break from 5850, come down into around the 5750, shake some people out, scare some people out, and then turn back up and go on a monster run. Remember, Q4 is typically bullish seasonality. Now, seasonality hasn't really played out this year at all, so take that with a grain of salt. But are we seeing that actually play out where we just get some shakeout, people freak out, and the market turns right back around in the very near future? I think that that's a possibility, but I'm not willing to jump into it really until the market just kind of proves itself a little bit, right? I would prefer to see the market prove itself and then go from there and then attack it. Okay, take a look at SPY, and then we'll take a look at some of these individual names. Let me update this. Okay. So let's go back to SPY, how we kind of started the trading session, or the live stream, how we started breaking this, and how this could be a potential catalyst for somewhat finding some sort of stability in the markets. Has it yet? It's kind of came down. I mean, it's been going sideways, so maybe perhaps. Market net flow still suggests that, I mean, 5,700 could be a potential strike to watch intraday, or 0-date level, sorry. Market net flow still suggests bearish divergence, bearish convergence. Okay. Let's go into the daily time frame, daily charts, and we'll take a look at some individual names. So make sure if you haven't done so already, post them in the chat, and we'll pull up some individual names, see if anything's setting up. Pullbacks are good, people. Pullbacks are good because it offers up opportunities for the following days ahead. If you execute, right? If you panic, right? If you panic, chances are your position sizing was out of whack and or you didn't have a plan. Excuse me. Oh. Bum, bum, ba-dum, ba-dum. How about BPSPX now? Yeah, the BPSPX chart. I mean, that crossed down through 70. It did give us a warning, right? I can give you an updated chart on that. Let me see if I can pull it up here. That one amongst the BP COMPQ actually gave us a warning. Like so, here's the BP CMPQ. So the NASDAQ composite. Give me a second. I'll just get the BP. I'll get them both. Hey, thanks, Trader Como. Appreciate that. Okay, so this is the BP COMPQ. A few days, weeks, whatever it was, I don't remember when I posted it, but it was in October. But what we called out was how the bullish percent index was putting in a higher high, but the RSI was putting in a lower high. And I just went back through history and I said, oh, what's the other times it happened? And did we see any, market sell off or whatever? Well, it happened to be, in August of 2023, and then also in 2022, we saw some bearish divergences happen to take place, and the market saw some weakness. It sold off, and then I highlighted that when we see these sell-offs, what we can look for is the potential for a turn of a bullish divergence, and you can see that we started seeing lower lows in the readings, higher lows in the RSI, and it actually helped find marking points for the bottoms in the market. So what are we seeing now? Well, the market's coming off a little bit. It's nothing crazy, but the RSI is starting to, it's starting to now head down to that oversold state as far as the RSI for the bullish percent index. Now for BPSPX chart, which is one of the ones that I posted out on Twitter, we talked about here too. What we talked about was the red lines indicate every time that we went above 70 and crossed down through 70. And what you'll notice here is that typically we've seen some weakness when that's the case in the market, at least 10 out of the 11 times, because if you go here, that actually wasn't the case. Okay, so now, I would consider this that we've seen weakness now, right? So I would consider this one also part of the red. So it's saying basically we had a higher probability of seeing some weakness when we cross back through it. Now, if I go down to the RSI, that's where it gets a little interesting, is because the RSI is also already in an oversold condition. Now, oversold conditions in the RSI for the bullish percent index, they can remain oversold for a long time. So what do? Well, you can look for, once again, positive or negative divergences to form in the products. So for example, like right here, there was one. Right here was a positive divergence. Okay? And then right here, right now, yeah, price is coming off, but what happens if it goes like this? Boom, and it creates a positive divergence, and this goes like this. Well, that could indicate that we can potentially have the potential to push it a little bit higher. And that's where I go, okay, where can we potentially go? And we look at some more of those gamma levels and where the market's reaching at from a net gamma perspective, right? Net gamma perspective, you go over here, they're still reaching out to 6,000. So that's the call wall. As far as downside, 5,700. All right, so if we crack through that 5,750, which we did, look for 5,700 to be that put wall. If we crack, move, right, it shakes people out, fear instills, and if we can hold that, get back into positive gamma territory, that could be that market pullback that everybody's been thinking was going to come. Can it get more extravagant? Yep, as long as traders continue to reach out further, right, it can get more extravagant, but what we know is if we start to see strength, we can jump into that strength. If we continue to see weakness, you can just let it go, right? Let it go. SPY, S&P 500 for the day, is still sitting around these lows for the day. How do I pull up market net flow? Market net flow is on Tradie Ticks, so if you want to pull it up and you're in the Discord, which you are because I'm reading the comment from there, you would type in TR-net flow market like this. It's going to show you the momentum indicator. Type that in query channel. There we go. Okay. All right, let's see if market net flow is changing at all. It's not. Not much. Still really nothing going on here. All right, we'll pull up some individual names. Let's go back to that. All right, I got to close out my Discord because it keeps on pinging. Wait, I actually got to open up my Nvidia. Now I got to open that up. All right, first let's look at some of the bigger products. I want to look at some of the bigger products, and then we'll go from there, and we'll look at some individual names. Now, Apple's already reporting earnings, but I do want to call out just where the weekly expected moves are on these bigger products, particularly the lower weekly expected moves. So I'm going to go ahead and go like this, expand to the left, shake it to the right, edit properties, and I'm going to go ahead and type in the expected move for Apple for the week. This is what the market priced in for the week. Albeit it also had earnings, right? Obviously. So down here is the lower level that the market said basically Apple can move down to. There's obviously a high upper level too, which is 240.74, which is up here. So Apple for the week, I mean, even if we come all the way down to 222, that's still within the weekly expected move, right? Honestly, if we came down there today, I would actually think that Apple's earnings would be a more positive sign because the market moved all the way down here. They anticipated earnings within this week for the weekly expected move. So I would think, unless if the market really doesn't like what it gets for earnings. But yeah, we're right there. The lower move there for Apple is 222. Okay, I want to go to Microsoft next. And then type in that weekly expected move. So edit properties and see what this one's doing. So the lower level for the week that was for Microsoft is 407.66. And we're there. So we're outside of the earnings expected move, but take a look. The market last Friday said, this is what we're expecting for risk for the week. Now there's still 1 day left, but Microsoft is here. In fact, it's actually just been here the entire week. Look at, or the entire trading session, basically. So the market today is really being driven by some of these earnings, right? So we have Meta and Microsoft. Well, Microsoft is at its weekly implied move already. So what's after Microsoft? Let's go Google really quick, and we'll keep on going down because we have more earnings coming up. So Google is above its rising 5-day moving average. It tagged its earnings expected move, and we started coming off. So in my opinion, Google is just pulling back right now in bullish context. So if I go to the daily time frame, this is what I like to see. I like to see big bullish moves, and I like to see consolidations. Now we're pulling back once again because we got fairly frothy into an inclining 5-day moving average. I mean, these are the type of trades that I love to set up. So for the weekly expected move, so this was the earnings expected move. So I'm just going to go ahead and edit properties of this one, and I'm going to go the upper expected move for this was 176 because it gapped up on earnings. Okay, so we got outside of the weekly expected move, and what is price doing? It came back into it, and now it's doodling around it. So we're actually back in the weekly expected move right now for Google. That's all we're seeing. So perhaps if we do get some more consolidation, the week passes and we will get our new weekly expected moves, and it's in bullish context, this could be one to potentially play into its next upper weekly expected move. Let's go to Amazon. Amazon's going to be reporting. Amazon's at lows of the trading session currently right now. Let's see where its weekly expected move is. I got to learn how to turn off notifications on my Discord because I don't know if you all are hearing it, but I keep hearing it. Okay. Amazon lower expected move is 175.17, 175.17. Okay. Boom, boom. Boink. So here, Amazon's going to be reporting, and we're well above the weekly expected move still. In fact, the trade, if we go to the trade tab, the expected move here is for just the earnings move is $12. Go like this. I mean, if market doesn't like what it sees, we're going right into the lower weekly expected move for Amazon. Okay. And if it does like what it sees, it'll go up $12, right? Based off where it currently is at right now, at least, because we still have a lot of time left in today's trading session. This is Amazon. Let's go to Tesla. 251.38. Tesla is at its lower weekly expected move right now. Look at boink. It's actually at its lower expected move. It's below the 5-day moving average. It's starting to calculate as far as the decline goes. Little bit of a bullish divergence here in the RSI. But this is what the market priced in as far as downside risk in Tesla. It's there. It's in its happy place. Go to the daily time frame. What's it doing? Well, we saw a nice big bullish move off earnings, and now we're pulling back a little bit into what the market anticipated as far as risk. Okay. Let's go Nvidia. Somebody had mentioned Nvidia. So Nvidia is getting quite a bit of a move here. Let's take a look at. Ignore the yellow candles and that white line up there. I'm going to draw right now. Extend to the left, extend to the right. Edit properties. All right, let's see what Nvidia's lower expected move is. 134. There it is. So Nvidia trading currently outside of its implied move. So if I go over here on the 15-minute time frame, we sold off into it, we came back into it, we came back out, we came back into it, and we're pushing back through it. But so as at this current moment, we're outside of it. Now, there's always a higher probability that we come back into it, right? That's just probabilities. If you think of things in terms of distribution curve, 68% of the time, it'll close within those expected moves. Doesn't mean it has to do it. It closes outside of it on occasions too as well, obviously. I'm just saying the higher probabilities. The market is efficient. And when the market becomes inefficient, you'll notice that because volatility typically goes wacky. And you'll start seeing breaks, closes outside, and it gets pretty nuts. So right now, we're floating just slightly outside of the weekly expected move for Nvidia. AMD. AMD saw a lot of sell side on earnings and then following through today. So this is going to be an interesting one. I feel like this would be outside of its expected move too. I think a lot of semiconductors are probably outside of it. 143.78. Let's see. I'm wrong. Here you go. AMD sold off on earnings. Followed through today to where? It's a lower weekly expected move. But keep in mind, these expected moves that I'm typing in on the screen, I share these in the Discord group, right? I put these out on, when did I put these out? When did I post them? I post them before the week starts this week. So I posted it 10:27, these levels, right? These aren't just levels that I said, hey, let's put a level here. It's based off of the implied volatility in the options chain, off a specific strike, right? The weekly closing strike. So AMD is at its happy place. It's there, right? So if I go to the daily time frame on AMD, right, it's selling off and people are like, oh no, the market priced this in. But I mean, remember, it's plus or minus, but the market priced in this risk. So it's currently, I mean, this is all telling me right now that the market's not doing anything crazy outside of what it implied. Meta. Let's go to Meta. Okay, Meta. Extend to the left, extend to the right, edit properties. The Meta weekly expected move, the lower one was 526.17, 526.17, pluggy. That sounds really low. Did I get that right? Yeah. Look at the 15-minute time frame. That sounds off, but that's what it priced in, really? Yeah, I guess so. Yeah, that's a big expected move. Yeah, so Meta's well off of the lower weekly expected move. The upper expected move for Meta was 620.33, so it was way up here. I mean, that was a big implied move. We're talking $47 for the week. That's a big one. That's a big one. All right, so there's Meta. Netflix. Netflix holding strong, man. So I'm going to go up, so 774.99. I'm going to do the upper expected move because there it is. So here's the upper expected move for Netflix. Was this? Oh, this was reported Friday. So Monday was right here. And then it came into and around its upper weekly expected move already. And that's kind of where it kind of capped right there. And then right now, I mean, geez, Netflix is looking pretty strong here. Not going to lie. We're seeing these higher lows and then these lower highs. It's getting pretty tight, coiling up. So let's go to the daily time frame here on Netflix. This is one of the more stronger charts. And you had a positive earnings, and typically strong stocks get stronger, especially when you get nice big bullish earnings. So right now, I mean, this could be one that you can potentially look for a potential trade continuation at some point. Like you can have a very tight risk for a potential, nice reward if you do get that continuation. All right. So there's the big names. Let's take a quick look back into the markets. Qs is down 2.32% on the trading sesh so far. Let's go to the vol band, see where it's outside of. It's well outside of it right now. And we'll take a look at market net flow, see if anything's changed. So Qs. Here we go. Qs are outside of its implied move for the day based off of NASDAQ volatility. Market net flow, it's bearish. However, notice here that we started to lose convergence for the first time basically since the start of the trading session, right? Since we started getting red, which means that SPY is moving with market net flow. So here is telling us that this is potentially the area where the market can find a little reprieve from this bearish. Now, the unfortunate thing is market net flow is still a very, very bearish divergence, but the strength of it, meaning the price action of SPY moving with market net flow, has come to not a halt, but it is slowed down. So it could be a period of chop, digestion, basing, or potential a turnaround in price. Okay, so if I pull up S&P 500, we're still obviously in negative gamma territory, clearly, because we would know for now. That'd be insane if they rip that high. Okay, market net flow is kind of changing. Where's my trend change? There it goes. We're outside of the implied move for SPY, still above the weekly. If we start to see it bounce, where can we potentially go to? I'd be looking back at the VIX daily expected move. Pretty much now, right? So if I go to SPY, and back to what we talked about in the very, very early part of the day. Give me a second here. Once we broke this trend, this is what I'd look at from an absolute to potentially start basing out. And then I would prefer to see market net flow change. We just saw market net flow change. So now let's see what price does, right? Now we're starting to put like ideals in our favor instead of just buying the dip, buying the dip, buying the dip. And now we're putting it together in a package to give us something, more ideals in our favor. And you can still take a loss. But if you put more ideals in your favor versus just trying to gamble and guess, you'll also take losses. So being more strategic and allowing for better risk management, in my opinion, that's the way to approach this. Let me change this because this is the wrong. There we go. Apply. There. That is the accurate level there for vol bands. So we said 527.57. Should we get in our rocket ship or should we stay where we're at? Because now is the best probability of the day so far that we actually start to see some reprieve. Out of the entire day, now would be the best time. And just because it's the best time doesn't mean it's like an A+ setup, people. But as far as what we've been seeing now, makes the most sense from a trader's perspective, from my perspective. Okay. I need a break, man. I'm tired. I'm tired today. I'm exhausted. I got to go trick-or-treating. You know, I want to get a lot of candy. It's going to be fun. Trick-or-treat. Can I turn on captions? I don't even know if that's a possibility while I speak live. I'd have to look into that, Trading Girl. I don't know how that works. For the past year, the monthly EMs have been keeping you alive. Hey, those monthly EMs also work great. By the way, if you're in the Discord, we're going to be posting those monthly EMs today, later on in the trading session. I might have them out tomorrow morning, but if you're in the Discord, I'll have those new monthly expected moves, because today is the end of the month. We're going into November. So we get new November monthly expected moves. You can't, yeah, Blue, you can't have captions on lives. On a live stream. I didn't think so. But I think that maybe after it's live? I don't know. I don't know how it works. I'm just reading the chats now. Can I add a couple more ideals? Hey, I'll add as many ideals in our favor as possible when it comes to it. I like to start stacking, you know, as much as I can, but you can stack as many as you want and still be wrong. The more ideals that you stack in your favor, meaning trend break, like, a trend, all these different things that can, like, you got to understand, the more you put in your favor, you'll get less signals, obviously, because it requires more things to go in your favor. So I find a sweet spot to be like 3, maybe 4, and sometimes even less than that. So it just really depends. But once you have like I need this to cross that and this to cross this, and I need the Williams %R and the RSI to do this and this, then you're like, okay, the opportunities in the market go down, and you still have opportunities for loss within those smaller buckets. So you gotta kind of find balance, you know, find balance for this your strategy or your buy and sell engine, right? Oh, you think you can, but there would have to be a delay in the stream. Okay, I'd have to look into it. What did I say right now is the best time for what? Right now, I mean, as far as the market goes, so if I'm not executing anything at the moment, but looking at the current market conditions, right? As the market was falling off, if you were looking for the best opportunity of the day to buy or go long, that's what I was stating was when I said that. I was like, now would be probably the better time out of any other time during the day as the past. Now that can change as more data comes out, but the reason I said that was because we had that trend break earlier in the day, but market net flow didn't really change. So then we waited for market net flow to change, right? Market net flow started to lose convergence, gain convergence, back to gray. It's kind of chopping around here. So the reason why I said it's probably the best time now is because of those factors. You had the trend break, you're outside of some of these key levels, so you're thinking in terms of probabilities, market net flow, the convergence, meaning the price of SPY is not moving with market net flow now. And then you can go back and then you could strategize of how you can potentially play it and where you can potentially play it too. That would be the only reason, right? That'd be the only reason. Now, in my opinion, it would be much better if this green line started turning up. I would much more prefer that. And it's just not doing that. It's just not doing it. And then on top of that, if you add more context to all of this, we just talked about the big market cap names, Apple, Microsoft, Google, Amazon, Tesla, Nvidia, and a lot of those were already at the weekly lower expected move and reported earnings. So they're in kind of that market happy place, which tells me also if this is a good place where the market can continue to stall out and or build a base or potentially bounce from, right? That's all. And then you still have to set up a trade plan, execute on risk, because as we know, things can change quickly. It can change quickly. No, it's not trade paralysis. I guess if you have too many ideals in your favor, it could turn into trade paralysis. But the from an intraday perspective, we're trying to find a time to be the best time to buy, and it hasn't been until the time, in my opinion, was when I said it. That would give us the more better odds, given the case of market net flow adjusting slightly there as we're down in these lower weekly expected moves and so forth. So it's just taking into account like various parts of the market. Now, if I were to just guess, the best time, if I was just to guess and look at the price action chart, would have been probably right here on this break, and then you would just have to hold it. You probably, I would have gotten stopped out if I did that, right, from here, and then I would look for it to reset up again. So for example, right, if price wants to come down more, like say if price does break down, maybe the best time to set up would be something like that, right? Or maybe I don't know, whatever the case is, but then we can have a new best time to enter. I'm just talking about what we've seen in the past and how things are changing now. Q's still down 2.24%. IWM is down 80 basis points on the trading session. Let's take a look where its implied move is for the day. Let me clear this out. The implied move for IWM was down here to 217.58, just based off of their volatility index. Didn't quite come down there. SPY, 1.5% down. And we want to see what price does and see if it can come back up to that 527.57. Carvana, what target do I expect at the end of the year? Oh, I don't know. Trade and grow. I have no idea. Yeah, it's really honestly too hard to say that kind of stuff. How am I supposed to know where this can go by the end of the year? As we're breaking high territory right now for the year. I would like to see, so Carvana, nice big bullish earnings move. So now, if it consolidates, sets back up, just like we're talking about with Tesla, right? Sets back up after bullish earnings, consolidates. I love trading that stuff. But yeah, right now, for something like Carvana, I would go into the side-by-side comparison, and I would just now, if you were long it, I would just be looking to manage risk, right? So if I go to Carvana, look at the daily time frame, I come over here to the 30-minute time frame. I'll change this up. I'll just go 1 minute, just so I can show you probably just how accurate this is. Ignore the trend changer there. I'm going to take that off, and then I'm going to show you. Oops. Okay. So on earnings moves, you can apply that anchored volume weighted average price, and you can see how price kind of doodled around for the first part of the trading session. And then when it started cracking back above this, these are good levels where you can potentially play to trade. This one was kind of wild, but even up to here, it would have been a 1 for 1. And then over here, you could see we crashed back underneath it. So if you actually play a trade like this, you can also apply an anchor volume weighted average price back to this breakout area or this swing low, and you can manage the trade as seen. So if it comes back in and so forth, potentially trade it higher or have a stop loss over here if you're long it. That's on the very, very micro scale of this kind of stuff. If you want to go long, if you want to go less aggressive, and you're long it, you can update to the low of the trading session, right? Because typically, if you close at the high, you'll get some sort of follow through, or you'll get like an inside day. But just by locking in, you might not even lock in profits because you want to see how high it goes. You can just update your stop loss. That'd be one way of just going about it. It's just risk mitigation. That's all you got to think about, because you don't know how far price is going to go. Price can go to 350 for all we know. It wouldn't be that crazy, comparatively to what we've seen in the past, but we don't know. So what we do have control of is what we buy, when we buy it, how much we buy it, and when we sell it, right? Those are the only things we have control of. What is going on here? Why is this? No, that's right. That's accurate. Okay, that's accurate. Okay. Yeah, I did cover Tesla. We talked about its weekly expected move, how it was actually down to its weekly expected move. So if you want to get more so see how it's kind of coming off into its weekly expected move here, right? And it's kind of doodling around. So it's kind of at its happy place for risk. Doesn't mean you can't break it, but this is kind of where the market pricing as far as risk goes. Then you want to get a little bit more tactical if you're executing new positions and have ideas for risk, right? So for Tesla, notice right here, this was a swing high for Tesla after earnings. And then you can see price try to come back and it's holding and breaking from this swing high. So in my opinion, for Tesla, and you could do a potential handoff right here if you're looking at these 30-minute time frames, but I would prefer price to put in a higher low and then start breaking back from this swing high anchored volume weighted average price. The problem is if you enter here, you miss that run up. The benefit is if you buy here and it goes down further, you don't need to be a part of it. So if you enter in right here, where do you put your stop? I mean, it's basically right here. So you have a higher probability of getting stopped out, but you have a better risk reward if you enter now. So you can also build into the position and start smaller, but you just got to be tactical on how you approach it. Another thing that you can potentially do is just apply anchor volume weighted average price to when we started breaking from this and then say, okay, I don't want to wait till we break this one. Maybe I'll wait till we break this one. So if price comes up here, this comes out like this, and we start breaking from it, this risk level area here would make a little bit more sense to me. And then maybe I start my position and then comes up, comes back in, goes like this, whatever the case is, and then I'll add to it on a break. That could be another way of approaching it. So there's a bunch of different ways you can approach this stuff. All right, what's SPY doing? Let's go back to SPY. All right, so SPY still holding up rather well, right? I mean, it's down on the trading session, but holding up well from this kind of trend break and stuff right now. $5 trillion price target for Carvana. No splits, straight up to 5 trillion. Billion. I have not looked at Palantir. We can look at Palantir. Do I think 570 will hold for SPY tomorrow, Monday? I think it's possible that we float around those levels. But when I look at Gamma, I would expect, yeah, that'd be the case. Right? 570 is right here. Or 5,700, sorry. So I don't know what it is exactly on SPY. I would imagine, around that comparison. But yeah, 5,700 on SPX would be probably the level, at least in this current context. You can see it. It's right here. It sticks out like a sore thumb. All right. All right, market net flow. It is no convergence still. But we did, once that happened, once we talked about it, what's the market been doing? Boop, 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 boop. It's getting a little bit of reprieve. Is it out of the woods? You can debate that either way. You can debate that one back and forth for sure. But we did see a little bit of reprieve. So if you were trying to be, very tactical and take a trade, you're probably in the green short term, like on a little tiny pop. And that can literally change as soon as this market closes very quickly, because we do have Big earnings around the corner, ladies and gentlemen. Okay, well, we'll take a look at a couple more names. Have I looked at Paramount? I haven't looked at Paramount. I don't remember that ticker. Dell. Somebody had mentioned Dell. We'll just look at daily time frames. It's kind of a little bit all over the place for me. We are seeing some higher lows build. It's still above its rising 200-day moving average, but it's a little wacky sauce. So you'd have to go into the 15-minute time frame, start executing, start looking at levels like this. So you'd want to be above the 5-day moving average, see some higher lows, and maybe play up. But it's not like clean as day setup. Not like Netflix. Netflix was pretty clean as day right here. It's just higher lows. It's getting very tight. It's above its 5-day moving average. So, you know, a break of 760 may produce a pop to go retest up to some of those levels. Now, was this its earnings expected move? Yeah, now got outside of its earnings expected move and is coming back in a little bit. So this would be one that I would probably wait to see how it sets up. It's in good context. We're seeing higher lows build and higher highs. So the thing with this is, it's like, okay, if you thought this was the high, you were wrong. If you thought this was the high, you were wrong. If you thought this was the high, you were wrong, right? Strong stocks typically get stronger. It's the path, though. It's higher highs, higher lows. So do you think that this is going to be the all-time top? I mean, probably not, but how do we know when it's going to reach back into those levels? You can take a look at this prior earnings move, and it went down for a few days, right? And then it came back up, and then it consolidated, built a base out, and then we started breaking out further. So maybe we see something, you know, similar. Build a base, consolidate, let volatility come in a little bit, meaning the candles, you know, get tighter as far as price action, allow for a better risk to reward. Go to the 5-minute time frame or 15-minute time frame. It's below its 5-day moving average. Yeah, it's a little frothy, so maybe we get a bounce, but perhaps we start to see, you know, the structure change a little bit here. So it's not like a great setup right now, but it's not, if you're long it, it's not really, you know, you're not seeing any significant change in trend here. It's a bull trend in service now. Palantir, also a bunch of higher highs, higher lows. Volatility is increasing. You do have earnings around the corner, so I would not execute a new position into Palantir with earnings around the corner, because I don't know what the market's going to do. It's too much of a coin toss. So what I do know is I can go into the trade tab, look at the implied volatility out to the earnings. It's giving us roughly about a $5.67 expected move. So as we near closer, for example, if we close and earnings is still a $5.67 move, you would go like this. Oh, wow, it can come all the way down to $36, or we can see a bullet train right back up into around 47, 48. Overall, though, if earnings wasn't a factor, I would be waiting for this to build a base, consolidate, and if I was long it, I probably wouldn't even worry right now, because it's just in a really bullish trend, and I would just watch it. It depends on where you went long, right? If you went long right here at 45.14, yeah, I'd be out already, because that sucks, right? But if I was long here, I would be looking at the expected move more close to earnings, and I may look to reduce and or hold it. Depends on, you know, what the risk looks like going there. And if I was long here, I'm probably not worried at all, right? At all. If I wanted to, I'd probably have already locked in profits at that point and maybe moved up my stop. Me personally, I know that I would have. Is something going wrong with Discord? It's all gone for you? No, Discord's still up and running. You might need to resync it to Patreon if that's the case, or maybe send me a message on Patreon. But it's not down. It renews. I think, or I don't know. I guess it depends on when you got it. So it depends on when you got it. Make sure that you didn't get kicked out. Make sure that it was I don't know if it's monthly or yearly or whatever, but just make sure that because sometimes cards expire and then the bot kicks out, and then you have to resync it. And or if just something random happened, you can message me on Patreon, and then I'll check it. I can check it for you. But no, it's still up and running right now. It's still up and running. Oh yeah, Daryl, if that's the case, you should definitely still be in there. So just private message me through Patreon, and I'll want to make sure that it's still sunk up, and I could pull up your Discord username and see maybe for some weird reason if the bot did something, or just resync it. It should be fine. We'll get you back in there. Sometimes it does that. SMR, nuke scale power. I mean, yeah, you got a lot of attention in these type of names, right? NNE, OKLO, and this, I mean, this looks good. It's just very, very volatile. So we saw this little bull flag over here. Boom, we broke out. Price is coming back in. It's in a bullish trend. You have earnings around the corner. You got to be just very careful with these, right? Because they're so dang sensitive to price. So if you go up here and you just go down to here, we're talking a 16% swing. Like, that's damaging. If you take, like, I don't like taking 16% swings on a full size position for me. So I'd have to go very small size. I took Oklo, right? Oklo was a trade. You know, over here, we started seeing some intraday volume turn up. And boom, we saw this big explosive move, right? I'm not holding all of this. Because sometimes my positions I'm reaching my risk to reward at these type of levels. And then I look to see if it consolidates, sets back up, and so forth. And NNE was the same thing. So with these big moves can come more bigger moves, but I would prefer to see bases build. So for example, NNE is not getting the love that some of those are, but we broke out of this flag, saw some follow through, and now price is actually kind of calming down here in this name, right? So we're actually, now it's still a very high risk name because just from this day down to here is also minus 20%, right? It's minus 20% from that high to this low. So once again, position sizing is extremely important here. In names like this. So I'm not going to take a full size position knowing that if it just comes from where we are here to the low of the day, it's minus 8%. Because there's a high probability that we do retouch this. So my position size would have to be very small. And then I would say if that was it, boom, I'm playing here to this low or maybe even this swing low. This would be the risk. I'm only willing to risk, you know, X, Y, Z. But maybe if we get another pounce, I can get a 2-for-1. A two for one. Oh, you're welcome, Drillo. Apple we did talk about. Let's take a quick gander over here at Appy. So Apple has earnings around the corner, and the expected move for Apple was $8.79 so far, right? So if we close right here, you know, it'd be $8 up. I mean, it could be right over here to you know, buy after we report earnings, or it can be down $8. But chances are, like, there's a high probability that we tag those earnings expected move. That's what the market's implying as far as risk goes. We are extended to the downside here on Apple, but we have not reached down to its weekly expected move. So for example, if we came down $8, I actually think that it's a probability that we actually come back up into 222 if that was the case after earnings. Let's revisit SPY once again. SPY's just chopping around, doing nothing. See if market net flow changed at all. Market net flow. Nope, just still no convergence, bearish divergence. Where can we find the trend changer script for top? Oh, for Thinkorswim? TOS? I'll give it to you. Uno momento. P. DeRose, I'm going to reply. Here you go. In Twitch, if you want that, the trend changer. I don't know what they call it. I found I saw Brian Shannon just post this on Twitter, and I just like the look of it, and there wasn't a name to it, so I just call it the trend changer. I just had it coded myself, so I liked it. But that's this. So if you apply it, you could put it into your Thinkorswim. You go into setup, right? You go into open shared item. You type that code in there, and then you add it. And then just know that you got to put on the 5-day moving average. I mean, you don't need to, but you go into the trend changer, it's at 130 on the 15-minute time frame. That is the 5-day moving average. So if you change the 15 minutes and you go 30 minutes, you'd have to change this number to 65. So love set match. I did post it there, but I can post it right here for you if you want it. There you go. Here, I'll post it right here. Boom. There you go. That's for Thinkorswim. What economic data causes the markets to spill? I think it's a combination of stuff. I mean, the data didn't look all that great. All right, we had personal core PCE numbers. There's a forecast consensus, came in at consensus. Previous was 0.2, came in at 0.3. But I think what's really causing the market moves today is order flow, not really necessarily the data. The data can be catalyst, but if you look at the earnings, I mean, Microsoft's down 5.49% at reported earnings, right? Nvidia is down 4.17%. That didn't report earnings, but it's just a lot of order flow, in my opinion, is what's causing this. And you can see that kind of in market net flow. It hasn't really changed. Yeah, there was SMCI news too. Was it recently or was it just the other day? SMCI was they had I don't know, their accountant from Ernst & Young or something like that resigned, and yeah, SMCI broke down fast and furious. Boom, boom. Boom, boom, shaka boom. And then earnings is around the corner here too on 11/5. That'll be interesting. Nvidia, yeah, we did talk about Nvidia already. I mean, it looks like it's just pulling back. I mean, that's really all it's doing. So Nvidia on a daily time frame, it went on a monster rip up, right? And now we're just pulling back. It's still in a pretty bullish trend. So I can see more downside and more consolidation and building a new base. If I go to the 15-minute time frame, this right here is its weekly expected move, 134-ish. And we're kind of just doodling in and around these levels right now. We still have another day left too, so there's always a higher probability that we close back above 134 for the week. Sometimes if we break consistently more from these levels, you can get some really wild price action, but I'm just thinking in terms of probabilities. All right. 68% of the time, it closes inside those weekly expected moves, roughly, right? We're outside of it right now. More importantly, I like to really focus in on the S&P 500 when it comes to that, but same principles apply. SPY, still doodling. Saw a little bit of a pop, coming back down. All right, I think I'm going to be calling it quits here. This was just a quicker stream for the trading session. I wanted to just kind of follow through on some of this stuff. We are outside of the daily VIX implied move, still above the weekly inspected move. Market net flow still looks like very bearish. However, we are starting to lose convergence, meaning the price of SPY is not moving with it. So really, in short, if this turns back to red, careful, buckle up, right? We can get some more sell-side activity. Where can we get more sell-side activity down to? I'd be paying attention to 5,700, right? Go to gamma levels, 5,700. Oops, let me change that. That's incorrect. 5,700 would be the downside watch. It's also from a 0-day perspective, and it's also from a net gamma perspective if we want to continue to press lower. Other than that, we are in negative gamma territory. We're below a lot of these declining 5-day moving averages. So it's a time to just be cautious, be patient. And if you're trading intraday, make sure you just have well thought out levels of risk. That's all I really got for you. PayPal, I'll talk about, I guess we can mention PayPal really quick. All right. So earnings reported already? I mean, it's holding up rather well. PayPal's fine. To execute a new position, I'd prefer it back above the 5-day moving average. But I like the PayPal from the weekly perspective, right? We talked about this PayPal a long time ago on the weekly perspective because we were breaking out and we started to see a potential markup phase where the 30-week is creasing, 200-week. So I'm pretty much, I mean, I would be navigating it as time goes, but I would be managing a position size to see if this is actually turning into a longer term, bigger move in PayPal, right? So I'd be trading around some sort of position and look to add after basis form and so forth. Holding the 10-week, 30 weeks turning up, 40 weeks turning up. It has the best probability here of potentially going into that markup phase. And if we start getting back below these levels and this starts turning back down around, obviously, then I would be changing that. But yeah, that's all I got for you guys on today's stream. Hope it helped out. I'll see y'all later.